they're going to do 7% every single year. And if your retirement is out 10 years or 20 years, it's going to be massive. Hey, welcome to the Guaranteed Retirement Guys Show. I'm John Stevenson, your host. Thanks for tuning in once again. And today we're going to be talking about a 401k that you may have because you've been laid off. Or maybe you changed jobs. You went from one job to another and you're trying to figure out, well, what should I do? I've got all this 401k money. It's sitting at the other company. Do I roll it over to my new 401k? Do I put it into an IRA? What do I do? Do I just leave it there? What do I do? And that's the question I get a lot of times, especially in this environment. You got massive layoffs and you've got people that are looking for places to put their money and they're not so excited to put it back in the market. Maybe you've lost a lot of money and maybe you want to have some type of protection. Here's the thing. When you've got a 403b or a 401k or any other type of employer-sponsored plan and you leave employment, at that point, it is available for a rollover. And a rollover is just simply a transfer from one account to another like account. Same exact type of baskets. The only difference is one is employer sponsored and the other one's not. The other one's yours. And if you don't want any market risk at all, you don't have to put stocks or bonds in your IRA. You can put what we call an annuity, right? An annuity that can give you guaranteed income or an annuity that just can give you guaranteed growth, like a MYGA. A MYGA is a multi-year guaranteed annuity that right now rates are pretty high. They're averaging 4 or 5%. A few years ago, they were more like 2 or 3. But we don't know where rates will go. And so right now, people are locking those in and they'll transfer from an IRA or a 401k or some type of account that's tax deferred, and they'll put it into an IRA over with the insurance company. And that insurance company is a fiduciary of that account, and then they put the annuity inside of it. So that the annuity contract, if it's paying you a guaranteed 4 or 5%, great. Your account's growing and it's doing well. Maybe you got laid off from your job and you're only 5 years from retirement. Then what? Maybe it's not such a wise thing to roll that into another 401k with your new employer and have it subject to market risk. Maybe a better idea is to look at a fixed indexed annuity, a contract of income. If you put an income rider on there, it will give you a nice income stream if you decide to go that way. Maybe you're younger and you're 40 years old and you don't plan on retiring for 20 years. That's a perfect scenario where you can take that money, roll it over to an annuity inside of an IRA. And this annuity, what if it has a 7% roll-up rate? What we call that is that's a huge return. We're talking a 7% every year. Basically, what your money is doing is earning 7% every single year for the purpose of receiving guaranteed income later on. Okay, so the index might be doing whatever it's doing. You don't know what you're going to earn on that, and if the market drops, you don't lose a dime. The market drops, everyone's losing their shirt, you don't lose a dime. How's that? Now, if you're looking at income, I love the roll-up rates. Okay, because they're giving you a guaranteed rate of return for the purpose of receiving income later on. So if that's 7%, they're going to do 7% every single year. Okay, and if your retirement is out 10 years or 20 years, then when you turn on that income, it's going to be massive. If I got a $300,000 account and I'm earning 7% every single year, and I'm just dropping that in every single year for 20 years, and then at the end of the 20 years, I have a 6.3% withdrawal rate that's multiplied by my huge inflated account value of $1 million, I'm making 60 grand a year for the rest of my life. That's not bad. So every annuity is different. That's why you should contact me and we'll look at them. It's easy to book a call. Just check my calendar out. You'll see a link below the video, and I'm happy to go over whatever annuity you want to look at. And I'll look at the top one and I'll show you, hey, this is the highest income you can get, but maybe it has a little bit higher of a fee, and maybe you don't like that. And maybe there's one right below it that has the same type of income, but maybe has different benefits, like maybe a long-term care doubler is what we call it, where it gives you an option to have more income if you were to need long-term care. So, and there's different annuities that have that too. So anyways, you have options. That's really what I'm trying to say is you have options. You don't have to keep your money in a 401k. You don't have to roll it over to your new employer-sponsored plan. You can put it in something that gives you guarantees. You can put it in something that does not have market risk. You can put it in something that will give you a massive ROI as far as your retirement income for the rest of your life. Don't you think that's worth considering? I do. So, and if you agree, book a call. Book a call and we will look at those annuities. We'll plug in some numbers, we'll play with them, and we'll look at your situation, and then you decide. You decide what you want to do. Who am I to tell you what to do with your money? I'm just here to help, here to educate, and just give you access to the best possible annuities that we can possibly get. Thanks for listening, and we'll see you on the next video.